Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at CleanSpark.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, let's get right into this. We are looking at, the whole crypto mining world here in February 2026. And honestly, it feels like the Wild West all over again. You've got Bitcoin on a tear, you have AI companies desperate for power, and then you have CleanSpark sort of sitting right in the middle of it all.
Right at the intersection.
So let's start there. What's the elevator pitch? Why this company right now in what is a very, very crowded field?
Okay, so it really comes down to one word, scale. But it's a very specific kind of scale. We're giving CleanSpark a bullish score of 8 out of 10 because they're running this hybrid strategy that, frankly, most of their competitors just can't.
A hybrid strategy.
Yeah. On one hand, they are a massive, massive Bitcoin miner. We're talking 50 exahashes per second of computing power.
Okay, hold on. We hear exahash all the time. For someone listening who, maybe owns some Bitcoin but isn't a miner, what does 50 exahashes actually mean?
It's staggering amount of compute. I mean, think of it this way. 1 exahash is 1 quintillion calculations per second.
Wow.
So CleanSpark is doing 50 quintillion guesses every single second to solve the puzzle that unlocks new Bitcoin. It puts them in the absolute heavyweight division of miners. They're a whale.
So they're a giant in that space. But you said hybrid. That's the part that catches my ear.
Exactly. And this is the real hook. This is what makes it a smart wealth talk and not just a crypto bet. They're aggressively pivoting into artificial intelligence and high-performance computing, HPC.
I have to be skeptical here for a second. It feels like every company is pivoting to AI these days. You sell coffee mugs and suddenly you're an AI-powered beverage containment solution.
Right.
Is this just marketing fluff, or do they actually have something to back that claim up?
That is the perfect question to ask. And normally I'd say yes, roll your eyes. But CleanSpark is different because of one asset. In a world where electricity is the bottleneck for everything, crypto, AI, everything, they control a massive 1.8 gigawatts of power.
1.8 gigawatts. That number sounds enormous. Give me some context for that.
It's enormous. 1.8 gigawatts is roughly the capacity of 2 nuclear reactors. It could power a city the size of Philadelphia. That power portfolio, that is their moat.
So their competitive advantage is basically a giant plug socket.
Precisely. It's not about the machines anymore. Anyone can buy chips if they have the cash. The hardware is a commodity, but you can't just find a place to plug in a gigawatt of demand. That takes years of contracts, substations.
It makes them an energy infrastructure company that just happens to mine Bitcoin.
That's the exact lens you have to see them through. And right now, that bread and butter Bitcoin business is running full throttle.
Okay, let's talk about that side first before we get to the AI pivot. We just got the January numbers. You said 50 exahashes of capability, but what did they actually produce?
The numbers were really strong. In January 2026, they mined 573 Bitcoin.
573 in 1 month.
In 1 month. And that came from hitting that peak hash rate of 50 exahashes. The average was a bit lower, around 42.6 because of maintenance and things like that. But it shows the power is there.
And they're not selling all of that, are they? I remember them being one of the big Otollers.
They are. It's a core part of their strategy. As of right now, they're holding 13,513 Bitcoin on their balance sheet.
Wow, 13,000 Bitcoin. With prices hovering around, what, $69,000? That's a serious war chest. We're talking nearly $1 billion.
It is. A small portion, about 1,900 coins, are pledged as collateral, but the rest is theirs. And this is why investors often see CleanSpark as a high beta play on Bitcoin itself.
Explain high beta for us.
Sure. It just means it moves in the same direction as Bitcoin, but with more intensity. When you own the stock, you also own a piece of that huge Bitcoin pile. So when Bitcoin jumped past 69K last week, CleanSpark stock surged.
It's like a leveraged bet.
Exactly.
Yeah.
Which is great on the way up.
But it's a double-edged sword. If Bitcoin tanks, the stock gets hit twice as hard.
Precisely. And that volatility is exactly why this pivot into data centers is so important. Mining is great, but it's lumpy. Data centers are steady, predictable cash flow.
Right, the landlord model. You build it, the AI company moves in, they pay you rent. So walk me through this strategic pivot. They have the power, but are they actually building anything?
They're making real moves. The big headline is the Texas deal. They just bought 447 acres of land in Texas.
Okay.
And the plan is to build out somewhere between 300 and 600 megawatts of capacity there.
Everyone seems to be going to Texas. Why there?
It's the deregulated grid and the abundance of renewables. But what's different about what CleanSpark is doing is they're targeting transmission level power.
What's the difference there? Power is power.
Right. Not really. Transmission level means you're connecting directly to the massive high voltage lines. It's cleaner, it's cheaper, and it's much, much more reliable.
And for AI, reliability is everything.
It's non-negotiable. You can pause a Bitcoin miner for an hour if you need to. You can't just pause a training run for a large language model. That could ruin the entire project.
So they have the land, they have the power hookup. What's missing?
The tenant. And this is the key catalyst to watch. The rumor is they're in active talks with potential AI tenants right now to fill that space.
So if they announce a signed deal with a big tech firm, that's the moment the story changes.
It validates the entire thesis. The market prices them as a miner. If they sign a big AI client, you have to start valuing them like a data center company, which usually gets a much higher multiple. It puts them way ahead of competitors like Riot or Marathon.
Okay, but this kind of growth, it's not free. Buying land, building out infrastructure, this must cost a fortune. How are they paying for all of this?
That is the billion-dollar question, literally. They just closed a zero-coupon convertible notes deal for $1.15 billion.
All right, break that down for me. Zero coupon. That sounds like they're not paying interest.
That's right. It's a very clever way to finance this. They don't have that cash drain of monthly interest payments, so they could pour all that liquidity into building right now.
So why would anyone lend them money for free? What's the catch?
The catch is the convertible part. The lenders are betting the stock price will go way up. If it does, they can convert their debt into stock at a preset price and make your money on the share appreciation.
So the cost for CleanSpark isn't cash, it's potential dilution down the road.
Exactly. It's a bet on themselves. But if you look at their cash flow right now, it's not a pretty picture.
I'm looking at it. Trailing 12 months. Free cash flow is negative $1.4 billion. That's a lot of red ink.
It is a scary number if you don't have the context.
Right.
But you have to see that as capital expenditure. They're turning cash into assets, power plants, land, machines.
They're spending money to make money.
Right. And analysts see that. The consensus estimate for this fiscal year, 2026, is a loss of about $1.82 per share.
Okay.
But, and this is the key look at the very next year, 2027, the street expects them to flip to a positive EPS of 3 cents.
So this is the big spending year, and next year is when it starts to pay off.
That's the story the numbers are telling.
Yeah.
And their revenue guidance is strong, over $766 million. The top line is there. Profitability should follow once the new sites are online.
So it's a classic growth story, but how is the market treating the stock right now? Is it a Wall Street darling or is it in the doghouse?
It is an absolute battleground. CleanSpark is in the top 10 most shorted stocks on the market.
Top 10, so a lot of big money is betting against them.
A huge amount. The bear case is simple. Bitcoin will crash, and CleanSpark is taking on too much debt and will have to dilute shareholders. They see that negative cash flow, and they get spooked.
But high short interest,
Yes.
that can also be rocket fuel.
Exactly. And that is the bull case. You have a heavily shorted stock. You have its primary asset, Bitcoin, rallying hard. If the stock starts to climb, those short sellers are forced to buy shares to cover their losses.
Which pushes the price up even more.
And you get the classic short squeeze. It's a very real possibility. If Bitcoin holds these levels and they announce that AI deal, it can get violent to the upside.
So what are the professional analysts saying?
They're generally bullish, despite the shorts. B. Riley has a buy rating, price target of $19. Keefe has an outperform with a $14 target. They're looking past the current spending and at the value of the hard assets.
Okay, so it sounds like a coiled spring.
Yeah.
But I have to do this. Let's pour some cold water on the hype. What goes wrong? What's the nightmare scenario here?
The biggest risk, and we can't get away from this, is the price of Bitcoin. If Bitcoin enters a real bear market, CleanSpark suffers. Yeah. Period. Their revenue drops, their treasury value plummets, and the stock gets hammered.
They're still tied to the mothership.
Absolutely. The second is execution risk. What if they can't land those AI tenants for the Texas site? Building an AI data center is a lot more complex than a mining shed. If they stumble on the execution, that 2027 profitability target gets pushed way out.
And the third risk?
Dilution. We talked about those convertible notes. If they need to raise even more cash to finish these bills, they might have to issue more stock, which waters down the value for existing shareholders.
So it's the price of admission for this kind of potential. Okay, let's wrap this up. How should our listeners be thinking about this company in their portfolio?
Here's the bottom line. CleanSpark is a high-conviction, high-volatility play. You have a safety net with that massive 13,000 Bitcoin treasury. You have the cash flow from their mining operations. And then you have the explosive game-changing upside of this pivot to AI infrastructure.
It's a mining scale play meeting AI ambition.
Perfectly said. And here's the final thought I want to leave you with. Right now, the market prices CleanSpark based on the price of Bitcoin. But if they sign just one major AI tenant, does the market have to re-rate them? Do we stop looking at them as a crypto stock and start seeing them as a data center utility?
And if that happens, the entire valuation model changes.
The whole game changes, and that's the multi-year thesis.
Fascinating stuff. Thanks for breaking it all down.
Anytime.
And thanks to all of you for tuning in to Smart Wealth with Joshua. Don't forget to like and subscribe for your daily edge. We'll see you tomorrow.